So we're going to get started in just one moment. What questions you got? You got any questions? You struggling with anything? Need help with anything? Want us to help you with anything? Type it in the comments. Which channel are we live on here?
Okay, we can hear you now.
Now we're live? All right, now we're live. 11 minutes late, but better late than never. So today I'm going to be talking to you about investing in real estate and why real estate investing, whether you're an active real estate investor, passive real estate investor, is a better investment for you, most likely, than other investments. We are officially live and y'all can hear me? If so, I want to go, can you share my screen here? Share my screen. We're going to be talking about stocks, Bitcoin, different things today. I've invested in all of the above. You can see my screen? I can't see, so I need to know if you can see it or not. Thank you. All right, so here's the price of Bitcoin. For anybody who's holding on to Bitcoin or any cryptocurrencies, specifically Bitcoin, Ethereum, and some of the bigger ones, knows how much Bitcoin has gone up over the last well, really, the bottom looks like it was in December 30th of 2022, then slowly started coming up. I unfortunately bought some Bitcoin. I bought some where did I buy it? I bought some I started buying Bitcoin when did I buy that? May, June, July, August. I probably bought some right around here. I don't remember. But I was buying Bitcoin as it was going up. Maybe it was right here. I started buying Bitcoin right around here and this is when it was. All right, so I was buying Bitcoin right around here. I currently still hold some Bitcoin and some Ethereum and some Algorand. Wish I didn't have the Algorand, but the Bitcoin and Ethereum is finally back to breaking even. But I bought some here and have been holding ever since. Diamond hands, as they say. And the Bitcoin and Ethereum and all this stuff is going up quite a bit right now, right? We can see it here. Let's see the ETH price. ETH over the last 5 years. So it's not quite where it was at its all-time high, but it is still going up quite a bit. And, I wish I would not have, of course, hindsight is 2020. I feel okay because, it's come back up and I'm no longer negative. But I wish I would have taken my money here and not have invested it into Bitcoin. And I wish I would have taken advantage of real estate opportunities over the last 2 years. So even though I'm back to breaking even now, I missed out on a ton of opportunity costs by allowing that money to just sit in here over the last couple of years. Let's look at the S&P 500. Very steady, as we can see. It's got its ups and downs, but stays on its trend line. From 2022, it has, the last couple months, it recently passed where it was with its previous all-time highs, and now it's over 5,000. And this is kind of creating just some knowledge here. The Fed was talking about cutting the Fed funds rate a few times this year, but with the S&P 500, with the 10-year still gaining in price, I think the 10-year gained about 34 basis points over the last few weeks. It's unlikely that the rates are going to be dropping as many times as they thought it was going to this year, and as they've been telling the markets it's going to this year, or if they even drop them at all this year. It's pretty up in the air right now. But I will tell you this: commercial real estate It's not a great time to buy single family homes, in my opinion, and has not been a good time to buy single family homes over the last uh, 2 years. It was a great time to buy these properties in 2020, uh, in 2020 and 2021 when values were increasing substantially. I'm trying to get this thing all the way in here. There we go. All right. When values were increasing substantially over 2020, 2021, raising 40% year over year. But values have been decreasing over the last couple of years. They're probably about stable and bottom out at this point for single family, at least in Austin. But other markets across the United States, similar story, right? So it hasn't been a good time to buy those. But I'm going to tell you why I prefer real estate over uh, Bitcoin, Ethereum, stocks, definitely not bonds, definitely not giving out loans, definitely not holding on to real estate notes. Owning real estate. There's a big difference between owning a real estate note and owning the actual real estate. And same with stocks, Bitcoin, Ethereum, cryptocurrencies. I'm going to show you why real estate is my favorite investment and most likely, uh, will do the best for you as well. So, number one, leverage. With real estate, you get to utilize leverage. I can put a down payment on a property, let's say 25%, and I get the other 75% of the real estate covered by a bank, private money lender. I get to utilize leverage on the deal. And when I get my point number two, appreciation, it is not based on the amount of cash that I have invested in the deal. It's based on the entire purchase price, the entire value. My appreciation, my percentage of appreciation is based on that entire value and not just my cash invested. Let's see, what else we got here? Cash flow. If I am buying deals that produce cash flow, which I will, and you should not buy deals that don't unless you're flipping it. Uh, they will pay you every single month. And this is after covering all of your operating expenses, including property management, maintenance and repairs, insurance, property taxes, utilities if you're covering those, groundskeeping, every single operating expense that is involved with managing this property and owning this property should be covered by your rental income. And after your operating expenses, you're also going to pay your debt out of your rental income. And what's left over is your cash flow. So it should be paying you monthly, and it should be paying you a return that makes sense. I'm not talking 1%. I'm not talking $100 a year. I'm talking 8, 10, 12, 15% cash on cash return you should be receiving in cash flow. Next, one of my favorite benefits of owning real estate is depreciation. The tax advantages of owning real estate is one of the main reasons why it makes it so great. The United States government, the IRS, they want you to buy real estate and they're willing to give you credits and benefits for owning that real estate to offset how much you owe in taxes. Depreciation, I can write off all my cash flow. If I'm a real estate professional, I can utilize depreciation to offset active income. So I'm building wealth here. I'm using other people's money to buy real estate. I get the appreciation. I get the monthly cash flow. I get to not pay taxes on any of that money because it's depreciation. You also are able to defer taxes via a 1031 exchange. If I buy an apartment complex and let's say I create $3 million worth of value, and I go and I sell it, and I want to capture that 3 million, and that would technically be my profit that I'd be paying capital gains tax on. I can 1031 that 3 million into another asset and avoid paying taxes on it. So I could take that 3 million, go buy a $12 million deal, and not pay a single penny in taxes because I'm deferring the taxes. Is that how you spell defer? Two R's, one F, two F's, one F. As you can see, spelling is not required to invest in real estate. All right, next we have deferring taxes, depreciation, cash flow appreciation, and just the ability to continue to utilize leverage. So, cash out refinance. Another way to get tax-free money out of the property, get your equity out, go utilize it, and not pay any taxes on the money that you're getting. Now, let's look at stocks. Leverage, maybe, but no for the average investor. For the person out there who's got $5,000 and they're looking to invest in stocks, or they're going to take that and put it into an ETF, or they're going to take that and put it into the SPY, uh, uh, an index fund, they're not going to get any leverage on that. Sure, you can utilize options and puts and calls and things like that, but your average investor out there is not going to go and get a leveraged account to buy stocks. They're going to be paying cash. Uh, yes, you will get appreciation if you buy the right stocks. If you buy the wrong stocks, you won't get appreciation. And here's the thing with stocks too. Matt mentions this a lot. Stocks can very easily go to zero, and it's happened many times. Look at plenty of companies like Lehman Brothers and instances like that. A lot of these cannabis companies, uh, these stocks can very easily go to zero. I mean, what are they being backed by? Public financials. Do they have any assets? Sometimes they do, sometimes they don't. Sometimes they're shit companies and they go to zero. And if you get caught investing your money into a bad company, your investment could very easily go to zero fast. But if you do buy good stocks and buy into good companies, and you follow someone like Warren Buffett, you're definitely going to get some appreciation. Cash flow, uh, yes, you can get dividends being paid out from stocks, but again, you're just the average investor, and you're really not highly focused on investing in stocks, where you're putting your money, reading the quarterly reports from these companies, and putting a lot of time and effort and energy into this. You're likely not picking individual high dividend yield paying stocks that are also getting appreciation. You're probably investing into an ETF or an index fund that is giving you one of the two, or potentially one or both. But you're likely not going to be picking, the best stocks, right? If you picked like one of the best companies, can you go back to my uh, to my computer here? Let's look at. So we have the S&P price. Let's look at Apple. Oh, they're down 3.16% today. Let's look at the max. All right, so I think they're in the. Is Apple in the S&P? All right, so Apple's in the Nasdaq. Let's look at the top S&P company changes. Microsoft. Let's look at Microsoft. What the hell? Apple is in S&P. Okay. go back to Apple. I like Apple better than Microsoft. Apple guy here. Support Apple. All right, so let's look at S&P. If you invested into the S&P 500 in 2014, 1800, so it's about a two and a half, 3x since then. A little bit, yeah, a little less than 3x since 2014. If you invested in Apple in 2014, 19 bucks to 192 bucks, that's 10x. So to do really well in stocks and to outperform the markets, you have to be good at identifying and picking companies. You can go back to just me now. You have to be good at identifying and picking and betting on companies versus just investing into the exchange traded funds. Um, but you still can make a lot of money investing in ETFs, but the likelihood that you're going to pick winners for appreciation and cash flow uh, is unlikely. Matter of fact, Wall Street is betting against you. They call you dumb money. They think you're stupid. They think you, as a retail investor, don't know what you're doing, and they want to take your money. So, not only that, but you have all these institutions and the entire system betting against you as a retail trader. Depreciation? Nope, you don't get it. You don't get depreciation. Defer taxes? You don't get to do that. Cash out refi? Not typically. I mean, you could uh, have a stock portfolio and go get a line of credit based on your stock portfolio. But again, is your average investor going out and doing that? Likely not. It's more sophisticated individuals who are doing that. But within real estate, you don't have to be sophisticated to do these things. You don't have to be smart. You don't have to study the quarterly earnings. You don't have to make the right bets. It's very simple to buy good real estate investments and to gain all of these benefits here. Let's look at Bitcoin as well. Leverage, yeah, I mean, I guess you could go get a loan to buy Bitcoin, but most people probably are not. Appreciation, of course, you get it. Cash flow, nope. Depreciation, nope. Deferred taxes, nope. Cash out refi, you might be able to go get a loan and a line of credit based on your portfolio, but it's going to be very low. And that's the thing with stocks too is depending on what you're holding is going to depend on how much you're going to be able to pull out if you do go get a line of credit. With real estate, you're going to be at 70%, 75%, maybe even 80% of the loan to value you can pull out in a cash out refi. If you're holding some stocks, maybe they'll give you 50%. But with real estate, the banks love real estate. Everybody loves real estate. Everybody needs real estate. Real estate is stable. Real estate provides good returns, etc. Now, I'm going to show you how you can really maximize your real estate investment. So now that we've gone through that, we understand why real estate uh, is a great investment and why I prefer real estate over other assets. And although I do own Bitcoin and Ethereum, uh, I'd rather own that. In real estate, I could sell it if I want to, and I just might, but I might not. But I can tell you this though, I'm not going in and investing more money into Bitcoin and Ethereum. I am investing a lot more money into real estate. All right, so here's how, if you follow these rules, if you follow these rules investing in real estate, you're going to buy good investments. And these things aren't very complicated. You don't have to be a genius. You don't have to, read through hundreds of pages of reports and really study into these things. If you just focus on this here and follow these rules and do what I tell you after the rules, then you can easily make millions of dollars on very little capital investing in real estate. All right, so the rules. Location is most important. You need to buy in good locations. Do not go out and buy real estate in some random city where there's no growth, there's no jobs coming, there's no development, nobody wants to be there. People are leaving. Go buy real estate in good markets, Miami, Austin, Dallas, uh, big markets all across the United States. Go out and focus on these good markets. If it's easy to get, it's probably going to be hard to get rid of. You don't want to buy something that nobody else wants to buy. That's ridiculous. It defeats the whole purpose of supply and demand. If there's a lot of supply of something, of bad deals in bad locations, and nobody wants to buy it, that's a horrible investment. Do not put your money there. Put your money into something where there's low supply and there's extremely high demand. And you're going to learn how to structure these deals. That way, you're not overpaying for it. You're making sure that it meets all the other rules. But when you want to get rid of that asset or you want to sell it and trade up into something else, it's going to be very easy for you to do so because there's extremely high demand for that location and that asset. Next, deal rules. Buy below value. You need to buy below value. Do not pay market price for something. Buy below value. Make your money on the buy. You're locking in a return the instant that you buy it. Something up with the live, or are we good? Buy below value. Make your money on the buy. Go in, negotiate, buy really good deals at good prices. Don't overpay for something. Don't pay more than somebody else would pay. If you do that, you might put yourself in hot water. But you can overpay for something if you know other information that other people don't. If you know about future developments that are coming, if you know about opportunity that's about to come, if you know about the ability to raise income in certain ways that other people don't, that's not buying above market value. That is buying below value. You're paying a price based on your knowledge of being able to increase the value very shortly after you buy it. That's smart. You should do that, but you should never go out and overpay for something. Always ensure that you're going to get good debt. Do not buy something that requires you to get a bad loan or a hard money loan, or it only works with bridge debt. Don't buy real estate with bad debt. That's how you can put yourself into hot water. Make sure that a bank wants to lend on it. Make sure it's financial support good debt, and make sure that the numbers work for you having debt. Because if you don't use debt, you're really minimizing the ability to maximize your growth here. You want to maximize your investments. You want to maximize the amount of leverage that you're getting based on the cash that you're putting in, the amount of appreciation, the cash flow based on the cash that you're putting in. When you don't use debt and you pay cash for properties, unless you plan on refinancing and getting debt on it, shortly after, it's not that great of an investment. But when you utilize good debt and the property supports good debt, you're able to truly maximize that investment. Last but not least is cash flow. Day one. It needs to cash flow day one. If it doesn't cash flow day one, or you can't figure out a way to get it to start cash flowing day 2 or 3, I would say avoid it. You want to buy something that cash flows today. It works today at today's numbers. It gets good debt today. You're buying below value, and it's in a great location. You follow these rules, and you'll never go wrong investing in real estate. Now, I'm going to show you the last thing today is how you can make the value of this investment increase substantially. So, commercial real estate. The value of commercial real estate is based on NOI, net operating income. When your NOI increases, your value increases. So, what does that mean? It's based on capitalization rate. And when you're able to come into a property and increase the NOI, you're going to increase the value. So, in a market such as Austin, Texas, where cap rates are pretty low, uh, and let's just call it a 5 cap market. When you're able to come in, here's the equation here: value equals NOI divided by price. Well, sorry, divided by cap rate. So I'm looking for my increased value here. I want to increase value, right? When you buy something, you don't want it to remain the same price. You want it to increase in value. So if I'm able to increase the value of a property, increase the NOI of a property by, let's call it $200,000, and I'm buying it and I own it in a 5 cap market, my increased value is, someone give me the answer. Kat, what's the answer? Simple math. 200,000 divided by 0.05? $4 million. $1 million. If I can buy a property where I'm able to come in and increase the NOI of that property by raising the rent, right? 200,000 may sound like a lot of annual income, but if I buy a 50-unit apartment complex and I increase the rents by $300, then I just created $4 million worth of value. For example, if I can find an apartment complex in Austin, Texas, where it's rented out for, let's say, $1,500, and I know that the market rents for this apartment is $1,900, over $300 of rental increase. If I can implement those rental increases of $300 per unit, and I increase the NOI by $200,000 annually, then I've just created $4 million worth of value. Now, let's say I want to make $1 million worth of value. In a 5 cap market, I only need to increase the NOI by $50,000, right? 50,000 divided by 0.05 is $1 million worth of value created by increasing the NOI. So if it was a 50-unit apartment complex and I want to increase the NOI by 50,000, that means that I would need to increase the rents by $83. How hard does that seem? Rental prices are increasing by $83 no matter what. So if you just raise the rents on 50 units by $83 and you raise the NOI by $200,000, you have created $1 million worth of value. Now, this is where real estate investing becomes much different than owning stocks or Bitcoin, because the stocks that you own, you aren't doing shit with those. You are at the mercy of the board. You're at the mercy of the CEO. You're at the mercy of the CFO, the CMO, etc. The board who controls this company, whatever decisions they make, you're at the mercy of them. You're not going to go in there and raise the NOI of Apple by X amount to increase the value by X amount. So you're at the mercy of these companies. You're at the mercy of the people running these companies. And with real estate, you control, right? Bitcoin. I mean, I'm not the crypto expert here, but uh, it's It's just a digit in my phone, right? Like, for all I know, that digit could just disappear tomorrow. Um, I don't know much about crypto, but I know that I ain't in control of it. That's for damn sure. I can't control its value. I can't control the demand of it, and I'm at complete mercy of these these wallets and these exchanges and what the market thinks about it. With real estate, it's a lot different. Real estate, I can go out there, I can touch it. Real estate, I know that there's going to be people needing to rent it. The Bitcoin miners, all the companies who are listed on the stock exchanges, they got offices. Where do you think those people stay at? In real estate. Where do you think they live? In real estate. The Bitcoin mining farms and all this stuff. Where do you think it is? Real estate. Everything utilizes real estate. Real estate is needed. Real estate's not going to go away. And if you buy good assets in good locations, where are we at here? If you buy good assets in good locations, below value, with good debt, that cash flow from day one, and here's the last rule, you need to increase the value. Really important. You have to be able to increase the value. You want to be able to increase that NOI by 200 grand in a 5 cap market and make 4 million bucks simply by going to the tenants and telling them that their rent is now higher. You want to make $1 million by increasing it by $83 per unit on a 50 unit apartment complex. That's what you're looking for. While you're getting paid every single day, while someone else is paying down your debt, you're utilizing leverage, while you went in, you bought below value to begin with, and while you're in a good location where somebody will always want to buy this asset from you. Versus Bitcoin stocks where, and by the way, all the money that you make on here that we just went through, you're not going to pay taxes on it because you're going to depreciate the asset. And when you sell it, you're going to defer your taxes and put it into another property that does the same, and you're not going to pay capital gains tax on it. With stocks, you're not going to utilize leverage. You're not going to get much cash flow, most likely, or you're not going to get cash flow and appreciation, most likely. You're not going to get depreciation, defer your taxes. And if you do go get a line of credit, let's just hope that you got a good stock portfolio and they're going to give you a good LTV because otherwise, you're going to be able to pull out little money compared to real estate. So reach out. You should be investing in real estate. You should do this for your family. If you're a person who has a lot of money in an IRA or a 401k, you should learn how you can convert that into private real estate investments or your own real estate investments. If you're sitting at home or you're watching this or you're listening to me at work and you're thinking, well, I don't want to go through all the work of managing the deal, finding the deal, doing everything that's required to gain all these benefits here, you don't have to. You can passively invest with us. You can passively invest with other people. There's a lot of opportunities out there for you still to gather all the benefits of real estate without having to do all the work. Matter of fact, I think that most people should probably do this. I think that you're going to gain and do better by investing with someone who's active if you don't really want to do all the work than you would with trying to be active and find the deals and manage the deals on your own. But this is out here. The opportunities right now are insane. We've never had so much leverage and opportunity to go out and steal deals than we have in the last 12 to 18 months, and it's not over yet, but it will be. It will be going up soon. Real estate moves in cycles, just like the economy and everything else. And right now is one of the best times to buy commercial assets, and you might not get this opportunity ever again. So reach out if you have any questions, you want some help. We're here for you, and we want to partner with you and do more deals with you. So until then, we will see you next Monday. Hopefully with no